Hello there and welcome to The Value of Everything. So maybe I'm a little bit impressionable and maybe I favour one side of the argument, but I do think that there is sufficient information out there to state that the property market in Australia and majority of the Commonwealth countries is in decline. Now, questions are raised as to how this is all happening, and I don't think we need to look too far beyond the fact that the global central banks, in a concerted effort, has been gradually reducing its bond asset purchasing. But I think also at this time there has been an effort by governments to step in just about at the last minute to get the regulators to crack down, to send out warnings, but this is all to save face. So I think there's been a lot of activity, particularly on the YouTube channels and Twitter, really reporting on this matter. I think Martin North, Lindsay David, Steve Keen as always, the CEC report, all has been hammering home the problems in the property market and has almost been on the government's back in terms of remaining vigilant on them and stopping them from putting any hush policies through, like bailing strategies. But today, now that the crash is happening, what I want to look into is how the government may respond to these problems, how they're going to react. And this is going to be a little bit Australian centric. So last time when the crash was happening, there was a first time home owner boost scheme, which is obviously in play now. Also, there was a windfall of cash that was distributed to the public at large, but this time it is different. I think the population are very attuned to what the government is up to. One of the major things that people are seeing now is increased population, but there isn't the supply of housing for it. They're looking into corruption in land rezoning, whereby block of land which isn't available for a developer to build on is purchased by a developer, and then the government reclassifies it, or the local council reclassifies it as viable to develop upon. That instantly raises the value of the land and the property developer is very happy. Obviously there must have been some kind of compensation on behalf of the property developer back to the government, or this incentive measure would never have happened in the first place. And I think that studies will find, Cameron Murray, who I've interviewed before, has highlighted to this aspect of corruption. So the government finds itself between a rock and a hard place. Remember that governments, particularly the regional governments like New South Wales, relies massively upon the property taxes like stamp duty as one of their major revenue centres. So what we can expect now is that potentially that governments may be speaking the truth, or particularly independents are going to start sprouting out and start speaking the truth, stating that there is corruption at many levels. Just obviously to note that there is a Royal Commission into banking as we speak, and this is going to unveil a number of truths as well about corruption on multi-tier levels. And it's interesting that this is all happening at the most so-called trusted points of society, say lawyers, politicians and financial service providers, who are all being incentivized to continue the gravy train. So remember that the government is always reactionary. They never really are very proactive in terms of dealing with measures until there is public outrage. They're also big opportunists as well, so expect that coming into election times, this is going to be a very unveiling time. But putting aside all of those revelations, there still is the problems of finances which are not going to go away. If it's deemed that there has been a lot of bad loans written onto a book stating that it's been prime lending, instead where it should have been subprime lending, and if the asset book has to be revalued into being a lot worse than what it is, that does create a significant problem for banks and their balance sheets. As the risk measure increases, they need to have a lot more deposits or hard assets to back up the bad loans which have been issued. On the back of that, there has been a number of hybrid bonds which have been issued by these banks for funding for the meantime, and they're highly dangerous to the unsuspecting customer, as in a declining market where banks cannot afford to pay for this corporate bond, they will provide shares instead, but this will be at the same time where their share price will be declining. This creates a exacerbating issue, so the banks will be in a major freefall. And then we step into this territory of whether the people's deposits are safe or not, which appears that the wording and the legislation is really unclear. They have to activate APRA to step in, and it doesn't seem like the wording means that they will always defend depositors' money. It can be deemed as any other instrument. But the CEC report has done a tremendous effort at highlighting this to the people, so I don't think that the government can necessarily get away with a full bail-in measure. Now, the other side is a bailout, where the government just takes on all of these toxic assets. But then on the other side of the bailout, there has to be a austerity measure put upon the people. And I don't even think that the people are really going to be that happy about that either. So I could see some massive demonstrations about either side of the coin. Obviously, the people would prefer a situation where their deposits are guaranteed, and anybody that has been making bad decisions fail, which is a very simple way. The Glass-Steagall Act would separate the retail banking side and then the investor lending side as well, which is one measure, but it potentially does seem like the people would prefer a nationalisation of banking. So things get very interesting at this stage. This is at the backdrop of the cost of funding going up massively, so that if there was a major banking crisis in Australia and the people really refused either side of a bail-in or a bailout, there potentially would be a default on corporate bonds. Now, this may be happening around the world, and that only has an aspect of increasing the risk and the demand for yield to take on any of these bonds. So the Australian government is in a very difficult place at this point. Interest rates are at their lowest. Most governments around the world are sitting on a deficit, which is continuously being funded by the bond market. So if that dramatically rises, that puts further pressure on the government to issue bonds providing higher yields, which thus has to be taxed from the people again. Either way, the people are going to see it as a other taxation to them. Even if you look outside of the bail-in, bail-out, if the government's going to impress them with another tax, regardless of what they've done, governments are going to impress them with harder tax, even though this has been nothing to do with them. It's going to be a very tough time to be a politician in power. Now, we've got to look at Steve Keen at this point, one of the solutions that the governments can activate in this time, and that is a debt jubilee, writing off or providing funding to everybody, writing off everybody's debts, or if they haven't got any debts, providing them a boost in cash flow. This does deleverage the people, and this probably could only happen if there is a nationalisation of the banking system. So kicking the can down the road isn't really an option. Yes, you can stimulate the market, but there is no way they can maintain that low interest rate forever. So in essence, the free market starting to evaluate what is the cost of risk and pricing it in appropriately. Just to remember, if you look at things in a simple way, if there's a problem, the government may react, and they may call it some fantastic word like quantitative easing, but essentially it goes down to the people having to take the hit for the systemic financial issues. And also just to be very wary. In chaotic times, this is where governments can do very chaotic things. They can go to the printing presses and increase the money supply astronomically. They can turn into the Zimbabwe government, issue very draconian laws, say to censor anybody who is speaking out against the housing market. You could have a law to state that nobody can sell their houses for lower than what they paid for. Really crazy things can happen in these times. Usually this makes things rapidly very worse. It's always good to know these things. One thing is for sure, this is a breakdown of a system that has been perpetuated for a very long time. It is an incredible thing how long this has gone on for. But with markets, sometimes they can remain irrational for longer than you can stay solvent, but they can collapse within a heartbeat. So be very careful out there. Just keep in mind what may be installed for us. And just giving you a little inkling of my thinking is just to make sure that you're fairly liquid, or you have assets that are fairly liquid and can be exchanged very quickly, rather than being locked into a very hard contract which is backed by an asset which is sinking. Can be very tricky in those circumstances in this environment, but that's just my opinion. Do your own research and get the information, because now's the time. So thanks again. Any comments, thoughts and suggestions, very welcome, and I'll be back again for more.